Should we avoid hot IPO? This is the topic that time to time new investor would always have issue. So should we look into IPO and should we avoiding hot IPO? So this is happened. So September 2023, Adobe announced that they are acquiring Figma, and they are bidding or they are acquiring at the valuations of 20 billion. All right. So when this announced, actually Figma also went into Adobe their annual event just to share what Figma is doing and then how Figma will be integrating it in Adobe. But too bad, our UK antitrust law or European antitrust commission have decided to stop this and say Adobe you couldn't acquire Figma. And because of the failed acquisition, Adobe need to pay Figma $1 billion. And people thought, what should Figma do after this? All right. So Figma went to a bit of doubt, and then with AI coming in, Figma also come to some challenge. But what happened is they pushed through and then went for a listing. So Figma went for listing on July 31st with an IPO price of $33. And with IPO price of $33, their market valuation is close to what Adobe is paying, 20 billion. And with that 20 billion, 33 IPO price, their price to sales at around 20 times is still oversubscribed for 40 times. Means everyone shares, there's 40 people applying for it. So it's a very hot stock, very received stocks. Yeah. So on the first day itself, 31st of July, the share price really opened at $85 and it closed $115. And their price to sales ratio, the valuations immediately shot up to 70 times. Very high. Even after hours, it shot up to $143. So it's close to 86 times. Palantir is around 100 times. So Figma is close to Palantir valuations at 100 times. So it's 86 times at the peak after hours. But it went down. So on 4th of August, it went down to $88. Even if $88, their valuation is at 53 times. This is a very crazy IPO season in a sense, because previously, there's two other IPO, which is CoreWeave and also Circle. All right. So CoreWeave and Circle, they went off high in terms of the trading price. This is not marked by IPO price. The opening price and right now to their latest trading price, it's already increased more than like 100 times. Means they are all doubled. All right. So they all went up a hype, went back down, went up a hype, went back down. So right now, yeah, Figma is going through the same route. So right now is IPO frenzy time. Should I look into IPO? All right, IPO trader. So these are the few IPOs that might caught up your interest and might caught up investor interest. This might be the companies that you'll be looking at. So Stripe, Revolut, CoreWeave already IPO. Klarna, Chime. So these are the few companies maybe you should look into. When it comes to investing, I always have this thought. You need to always actively looking. You need to actively looking at the market, finding out opportunities, finding out what best for this trading season. Or if like you are investing or you look into like long-term investing, fundamental investing, you should look into companies and you need to spend time to read into it. So that's why for general public, I always advocate this thing, dollar cost averaging. Make it a passive investing to start off with. So since last year, September, after 1 year, back then I was just thinking how to share from basics to bond investing, to SSCB bond, to like cash yield fund, to DCA passive investing, to active investing. So I went through this 3 months of route or 3 months program to people in Bellpulse to share this my thinking of investing. Previously, I didn't do DCA because I thought active investing to stock picking is the way to go. But throughout the years, I also like find out, this year itself, I experiment lah. So close to a year investment. So it's $2,200. In another few days, you become 2,400 invested dollars. And right now, I'm sitting at 8% return. This is just like passive investing. I do nothing. I just set up, transfer, convert, invest, one shot. I didn't do anything after I set up. And the investment, if I just invest one shot at 10th of September, actually I'm sitting quite a good return, 15%. All right. But because of market up and down, I buy quite high at like close to the year end period. But when it went down, I was also able to capture the low period. So I'm not worried whereby I'm buying high or buying low as long as I keep accumulating across time. All right. So this is the beauty of DCA. I'm not so-called worried. Oh, am I buying high now? Am I buying low now? No, I just slowly accumulating across time. So it's every investment $200. So it depends on how much you want to allocate and depends on the goals you want to achieve. So if you haven't think through what goals you want to set, you can go to Google Buddy and then set up your goal right there. After setting up the goal, you can start investing. So this is what I did: $200 every month, DCA, and then I'm sitting at 8% return. But if I look at year to date, if I invest in SPLG at first gen, actually is 7.97, not too far away. Yeah. So what is the key right here? Key is to start and be consistent, all right? And automation, using like automated way without human intervention, is the easier way to be consistent. So these are the things that I've been doing. And then you can just scan this QR code to watch this video on how to do DCA. Yeah, so this is the YouTube video I created previously. Next, there's this topic being raised: active investing versus passive investing. All right, so this is the statements that being raised. Only 38% of stock picker beats the market in 2024. And over 20 years, just 22% of S&P 500 company beat the index. In other words, if you like to win the market, within 500 of these top companies, you pick 22% of them. And how many people pick this 22% that beat the market is 38% of people. So I just assume I believe our community right here, we are within this 38%, within the 38% stock picker who beat the market in 2024. So this is the thing about active investing versus passive, that when we look at this statistic, right, then you ask, so if the probability is 38%, should I still go ahead do active investing, or should I just stick to passive investing? So this is what being concluded. So if you read this article on CNBC, right, it's actually shared by this, I think it's founder of Tasty Life. It's also one of the trading platform. His name is Jeff Joseph. So he said, actually, by learning market, right, it teaches you how market works, especially in protecting yourself or in risk management, all right, on how to manage your own personal risk, all right, so risk control, decision making. So these are the things that we should learn in life as well, because life is not like 100%. You need to take probabilities, all right? So these are things that we learn through so-called in the market. And also, by learning the market, by learning the company, actually we build up some transferable skills. So by now, I think a lot of you have gained a lot of insights in the industry or industry that you work in, or industry that even you are not working in, how good or how bad the industry is. So improve the judgment, not just in career, but also property. So your F&B is suffering, right? No. But the property is gaining. Why? In terms of REITs in Singapore, all the property are like so-called REITs are making money, but the sad to say that F&B are some of F&B are struggling, right? So these are the problem in so-called REIT space. If F&B couldn't continue to sustain, there will be an issue later of the day. So they have to manage the portfolio. So right now F&B have issues. So how they can introduce the mix so that they make the REITs more stable, make the REITs more strong to give up consistent dividend. All right. So these are the transferable skill we can learn by in learning about the market or learning about companies. So it's not just about return, it's about what you learn. So this is the second point. The third point is, last thing is this. So active trader help reward good companies and punish bad one. But passive investing may remove investor responsibility. So you don't need to do punishment. So why there's this like so-called short selling mechanisms that allow in the market, because they thought short selling could adjust downward some of the unsustainable like market trend or market behavior. This is the job of active trader. But passive investing like us, you don't need to care. Passive investing, you don't need to take this kind of responsibility per se. So these are the 3 pointers to say, in the end of the day, active investing is also crucial because it helps us to learn, help us to better appreciate passive investing, and also by active investing, the more we learn, the better our result. All right. So one of the things that I concluded throughout the years is this: a lot of time is through market cycles we learn the most. Kev say learn how to control emotion. Yeah, exactly. That's one thing that I conclude throughout the years. The first time I met my market cycle, I freak out. I was, oh shit. Is this real? Is market crisis coming? So this is the first time. So I started investing in US market in 2007. I started investing like maybe 2014, 15. 14, 15, there's some small crisis along the way to 17, 18. But very small. That's not major one. Only until 2021, that's the first major crisis that I meet. Wow, shit, it's real. So even though I know when market crisis come in, I want to go buy, I also scared one. I said, wow, shit, is this the lowest point already? Yeah. So this is the first time I met market crisis. Knowingly, this when this happened, I should buy. Yeah. So I already so-called went through some simulation, but it's so hard for me to execute. So 2020, I didn't do much. But when times come to 2022, hey, it happened again. Yeah. So this is the second market cycle that, oh, I learned in the first one. That's the second one that I should continue. All right. So for people who lucky enough just come in 2020 at the bottom, they may not learn much in the first cycle. They may learn much in the 2022 cycle, right? So 2022 cycle is the real testament for me to grow further in company where we so-called invest in company where the opportunity arise. Yeah. So the last few months itself, 2025, it become easier. Although emotional still take a big part, it's become easier for me. Thanks for always supporting. So these are the well pulse that we always running. If you are thinking whether should join in WellPulse, yep. So this is the link you can join in. So this is the WellPulse QR code, or you just go to click.google.com/join-WellPulse or -WP to join our every weekly session. So there's some changes along the way. There's some things that I'd like to improve. For example, getting more exposure, getting more people learn about investing. So that's why there's YouTube, there's Zoom, yeah, and also a lot of improvement on the thumbnail, on the titles, on the content, even how I present through the session. All right. Yep. So if you have followed me, thank you very much. I'll continue to do my best. So if you haven't followed me on YouTube, just search Google channel, subscribe, follow, hit like. So thanks again for all your support. I hope all these sessions give you clarity, give you enough turbulent management. So for us to continue to keep healthy, keep happy, and hot in the market. Thank you, everyone. So that's all for tonight. I will see you next week. Bye bye.